Welcome to Lifestyle Trading 101, where we aim to make about $1,000 every single week in the stock market. And today I'm going to show you a trade that we executed earlier today. And it's inside this post right here. And this trade is actually up $360 already with a maximum profit of $720 potentially if we stay below SPY 208 by Friday expiration. So let's take a look. So this is the chart that we have, and basically we finished a 1, 2, 3, 4, 5 pattern. And right here this morning, on April 4th, this morning, we alerted to subscribers a bearish call spread. So when we finish this 5-week pattern, we expect movement to the downside. We don't know exactly how far, but we don't care how far as long as it stays below this pink line right here, around 2078, and that corresponds with the SPY of 208. And as long as it stays below this level on April 8th, which is 4 days later, that's Friday expiration, then we collect the maximum $720. So if you imagine we executed this trade around 2065, that's right around this area. If you imagine like a dotted line, a break-even point, from here kind of gradually going towards April 8th into that pink intersection, this pink line, if you extend it, that's kind of like your break-even point. So already we're moving down, and of the $720 we could potentially collect, we already unrealized half of that, 50% of it. So around $350, $360. So let's look into the details of this trade. The details of this trade, this is a bearish call spread. So if you don't remember what the risk diagram looks like, it looks like this, right? So the risk diagram is the stock is trading right here, right? So it's right now we executed it at 2065, and we short the strike that's a little bit above it. So 2065 for SPY, that's around 206.5. And so we chose to short the 208 strike and long the 211 strike, right? So if you short the 208, you long the 211, you get a net credit. So your net credit makes it, we got around 50 cents. So our break-even point would be 208 plus that 50 cents, so that's 208.5. So anything below the 208 strike, we could get maximum profit potential of $720. And so we executed this when it was 2065, and we closed today at around 2056. So it's about 9 points lower. So it went in this direction. So we're on track to meeting our target. So back to this trade. The trade was an SPY bear call spread that we entered at 2065. That's today, April 4th. And what we specifically did, we did 15 contracts. So we shorted the 208 strike. We shorted that 15 of the 208 strike, while simultaneously buying 15 of the 211 call strike. Right. So this differential, this difference is that spread. Now, when we executed this, the net credit was 50 cents. And so I'll show you right here. Here's like kind of the order summary. This is the actual execution. So this is the execution. We bought 15, right? So we sold this 208, we bought the 211, and we got a net credit of 50 cents. And since each each contract is for 100 options, you multiply it by 100. So that 50 cents you multiply by 100. So you just move the decimal by 2. So it's basically $50 for every contract. Since we did 15 of them, then the maximum profit would be 15 times 50, which is $750. And since, if you look at this order thing, there's around $30 of commissions, so that becomes $720 as your potential profit. Your potential, how much money you're putting up? Well, you're putting up $4,200. So you put up $4,200 on that $4,000 position. As long as SPY stays below 208 by Friday, then we'll collect $720, right? So that's pretty good. 720 is roughly 1/6 of that. So that's roughly 18% return in just 1 week. So in terms of return percentages, it's pretty darn good. So again, here are the stats. We're risking $4,200 and we have a maximum profit of 720. If we realize that maximum profit, that would be 18% return on capital. And again, what we're looking for is for ES, the E-mini futures, to stay below 2078 and SPY to stay below 208. Then we collect our maximum profit. Our break even is slightly above these levels. So even if we reach those levels, we're just at break even. So it's not that bad. So if we look at the option diagram, there's another video that I show you how exactly we set this up and execute it. But for now, if you look at the option chain, the way you look at it is you want to pick the April 8th expiration date. And for the strike price, you want to select the 208. Right now it says 28 cents, but before when we did this, it was closer to 50, 52 or 53 cents. And the 211, and so this difference, when we executed it, was 50 cents, and now you could see it's at 25 cents. So we already got 50% drop from 50 cents to 25 cents. Our goal, of course, is to get to zero, and we expect to get that later this week. So again, this is a chart that we saw. This is the timeline we're looking at. This is the hourly chart. Each candle is 1 hour. And we saw a completion of 5 waves right into our target of 2070. I was hoping for a little bit more, but it looks like it didn't get there. So I think it's going to start rolling over. And as long as we don't get a rally above this area, because we could potentially get like a 1, 2, 3. But I don't think the pattern structure is suggesting that at this moment. We'll see. And let me just show you the daily chart. We want to go to finviz.com, go to futures, indices, S&P 500. And instead of hourly, let's take a look at the daily. The daily, this is basically what we've been looking at. And so far, we have like a 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, and then 1, 2, 3, 4, 5. So notice that the drop began at 2074. And just before the market opened, we hit 2071.5. I was hoping to get like a little bit more, but didn't happen. So right now we entered the bear call spread at a pretty good area. We alerted this trade at 2065, so we alerted right here, right where you see these whiskers. And then from there we dropped a little bit, and so we'll see what happens overnight and for the rest of the week. For now, our trade is doing pretty good. I'll keep you guys posted.